To the floor show, John Corpina. We're showing what happened in Parliament at Brexit overnight, which was just unbelievable. They didn't want to let John Bercow, the Speaker, get the heck out. They almost impeded his way. But what does this all mean when we don't know whether it's a happy or sad ending for the markets?
Yeah, Liz, plenty of uncertainty that's out there. And the things that we're talking about today are the things that we've been talking about for months and months on end. And I'm fearful to say that we're going to continue to be talking about this for the next few months, possibly next few quarters. The market is strong enough. Our economy is strong enough to sustain this as long as we kind of have a good idea of where the path is, right? I mean, we continually get information out of the China-U.S. talks. Sometimes they're good, sometimes they're bad. But the information flow needs to continue there. What happens with Brexit, still a lot of uncertainty there. That's playing its own course, and I think we're pricing in a way that's going to work out for everybody. And then from the interest rate side, another hot topic. We continually bounce that around, and we see those effects on our markets. But interesting, what we've been seeing the last few trading sessions, and I know you guys have been talking about this, is the rotation. It's the rotation out of the momentum stocks into the value stocks. And how do we see that? How do we know that? Look at the broad markets across the board. Yesterday, Dow, S&P were down. Yeah. Russell up 1% yesterday. Russell up 1% today. Continue to watch that. That's going to be a helpful guide.
Larry Shover, he just mentioned interest rates, et cetera, but I still think that stocks look like the better play if you're looking at yield.
Yeah, absolutely. I mean, right now with the 10-year, yields have gone up in the last week or so. But at 170, the stock market still is a better value. The real yield with the dividends of the S&P 500 compared to the 10-year Treasury, it's still not there. And if you recall, when 10-year yields were up around, believe it or not, like 100 basis point higher than where we are today, that's when stocks start to feel it a little bit. Mm-hmm. And we might see that again, but at this point, stocks are definitely the way to go, especially because 60% of GDP is being deflected right now by trade. When I talk about services, consumer, and government.
Gotta go, Larry.
Yes.
Thank you, John. Good to see you. We're coming right back with the shocker from inside the Beltway.